Good morning, this is Dyer Kennedy from Divergence Analysis. Today we're looking at the NASDAQ E-mini futures on a 6-range chart. I wanted to specifically focus today on the short-term trend and how filtering trades with the short-term trend leading indicator, which is this blue line, the quicker force within the short-term trend, can reduce chop and increase probability of entering trades that have an immediate chance of moving in your favorable direction. This is a chart from yesterday, April 14th. Today's April 15th. This is yesterday morning's opening session in the NQ. So we have all of the DVAN indicators in the DVAN SmartLines package activated on this chart. As I mentioned, this is a 6-range chart, but this methodology and philosophy of using the leading line in the short-term trend to filter out chop and identify the highest probability trades will work with time-based charts, tick charts, Renko charts. It's spread across whatever chart you use, the methodology applies. So let's dive right into it. What I want to say is we're going to filter the moves in this way. If the leading line is in the direction of a trade that we would normally take and cross through zero, then we will buy that or sell that, depending if it's a long or a short. So in this case, this is a short. The leading line is down and through zero through the histogram, meaning that the shorter term force within that short term trend is already moving in this direction. All other indications point to a short because we have a red price bar, a red arrow here, and a red histogram on the short term trend indicating a weak trend. So we would take this short. Conversely, we get to this point where we see a green arrow, green price bars, green histogram, but if you'll note, the leading line, not only is it pointed down, meaning that it's not in sync with the overall trend at this point, but it's also not crossed up through zero. So we would disregard this trade, which ends up being a good call because this is consolidation. Our next confirmed entry point would be the short here at 10:02. And this is a 6-range chart, so this might look differently on a time-based chart, but I'll mention again that the principle remains the same across different time frames and different chart types. This is a confirmed short because the leading line is showing us that the force is in that direction at that time when the other short indications and confirmations are given. We'll continue going throughout the morning. As you see, the leading line is not only down but not crossed through zero, so this is signaling consolidation, and we would not take this long trade. We would also not take this short trade as indicated by the red arrow because we have a green histogram, so we want to see a red histogram there. It happens the next bar, but it's important that they line up right when the signals are given. This green arrow indicates a potential long, and then we look down to filter that trade with the leading line. Although it is up and we have a green histogram, it's not crossed through zero, telling us that it's not quite ready to immediately move in the direction of our trade. As you can see, it eventually does move up, but we're saving ourselves a lot of chop and whip before that trade becomes profitable. This short trade is almost confirmed, but it's not. It's giving us every indication of a short, although the leading line is not quite crossed through zero. So this is something that we would not take. It ends up being a decent move, but as you can see, it moves down and then chops right back up. So this is telling us that, while it's very close, it's not quite ready to move immediately down. The green arrow here indicates a potential long. Although the leading line is crossed up through zero in this case, the leading line is down, showing us that it's not in sync with the short-term trend, so we disregard this trade as well. The next trade that we do confirm here is the short. The leading line is down and pointing down. The short-term trend is red. It's very small here, but it's red. We have a red price bar and a red arrow. So this shows us an immediate fall and a high likelihood of getting in the money immediately after entering that short trade. We would not enter this long trade because not only is the leading line down, but it's also not broken through zero. It ends up being a decent move, but once again, there's some chop and some whip before that move actually establishes itself. This is an interesting point. Sometimes when you see multiple arrows like this, it means that DVAN signals is oscillating around its baseline trying to figure out the direction. But in this case, we wouldn't take any of the three arrows. As you can see, the first red arrow, the leading line is sloped up and not crossed down through zero. We disregard a green arrow when the short-term trend is red, and in this case it's almost broken through, but the leading line is not quite broken through zero, so we would also disregard that. The next confirmed signal is this green short-term trend indicating a positive trend, a long signal, green arrow, green price bar, and we see the leading line is confirming that by being sloped up and crossed through zero. So essentially this is a way to look at the signals given by DVAN SmartLines and make an analysis that's going to decrease the chop, increase your probability of the move going in your direction immediately rather than consolidating, whipping, or reversing against you. So just to recap, we took this trade, this trade, this trade, and this trade. And if you go back and look over that time period on a 6-range chart, or use your preferred chart type to filter out these signals with a leading indicator, you'll see that that will increase your probability, decrease your likelihood of chop, and hopefully lead to a better P&L net at the bottom at the end of your day. Hope this helped. If you have any questions, please email info@divergenceanalysis.com or reach out to us at our website, DVANSmartlines.com, and we'd be happy to go over this in more detail with you on a one-on-one basis.